Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. My name is Gareth Soloway. Let's get started on this Thursday, November 20th, 2014. All right, first off, markets are slightly higher. You can see the SPY up 25 cents on the day. Markets initially had a solid gap down this morning, but again, on a technical basis, this is what I want you guys to learn. You have to understand when a gap down, if it breaks the previous day's low, whether it's valid as a breakdown or it's a fake out. And again, if you can decipher that, you can literally understand further downside or a retrace bounce back like we got today. So let's just take a look here. Number one, notice where we opened. We opened right here, which was below yesterday's low. Most amateur traders would think that's significant. It is not. It means almost nothing. Why not? Let's discuss. Well, really when it comes down to it, where a candle opens is relatively insignificant. It's more of an issue of where the candle closes. So initially we opened here below yesterday's low and we initially popped down, but then very quickly they rallied the market and closed us back above the highs of, or I should say the lows of this candle. Now think about it like this. Think about it like you just jumped over the line in capture the flag or in something like that, or even in football, right? So you just jump to the other side and you're offsides technically, but the ball hasn't been snapped yet. You get back before it is and you're good to go. So ultimately that's what you have here. So they inched over the line and then they quickly scurried back, saving the markets, and ultimately look at the rally that continued off of that. And you'll see this almost every single time, is when a level is pierced or opened below and it doesn't close below, massive upside buying is seen. Computer programs are now programmed to buy this market if that happens. Look at yesterday. Yesterday we had a small gap down, continued to break down. We closed below the 50 MA. What happens? Market continues to sell. We came down to the 200. We pierced the 200, never closed below, closes up here. What happens? Massive buying comes in, market shoots all the way up. So again, notice the same thing. Here's your low pivot. You open below, but you close back above the line. Massive buying comes in. And notice again here, we came up to double top, we pierced it, we consolidated. You actually never confirmed above it, but you've just been chopping here. And market's staying relatively neutral now at this point in the upper ranges. Based on past history, there's been no change in character. A lot of people have asked me, yesterday's sell-off, they were asking me when we were selling, is this a change in character? But look at the market rally back, so it was no change in character from what we've seen in the past month. Today we gapped lower. People were asking me again, could this be a change in character? I said, listen, we need to see what this market does in the next candle, in the next couple candles, in the next multiple hours. What happens? Market rallies back up. No change in character. As long as this market doesn't change character, you should be basically neutral to potentially looking for minor amounts of upside. Now, if we were to sell late in the day, as I said, let's just say hypothetically, I don't think it'll happen today, but hypothetically, if they were to dump this market down into the end of the day, down here, down to the lows, maybe even closing it below this low, that would be a change in character. That would be something that would get my attention very quickly, and I would say to you, okay, this is a change in character, expect further downside in the markets. Until that happens, neutral to upside is the path of least resistance and the most likely outcome, especially because, remember, tomorrow's Friday. Very rare they sell a market on a Friday. Next week, Thanksgiving. Very rare they sell it around a holiday, unless something breaks in terms of news that shocks this market abnormally. Now, we got some economic news out this morning, like CPI numbers, Consumer Price Index. It was slightly hotter, meaning a little bit more inflation than the market expected, but almost nothing. There was literally almost nothing different. Not enough to shock the markets at all. We did see the futures initially downtick, and that's why we opened lower. But again, it wasn't a big enough freak out to see the market stay there and negate the buy the dip mentality, which is what you have right now, folks. There's a massive amount of buy the dip mentality that's in this market. Every little dip is getting bought because a lot of traders out there, and we're talking globally too. First of all, where are you going to invest? You're going to invest in Europe, in China. Both economies are in the trash. Where are you going to invest? Japan, well, they just announced a recession. South America, that's a disaster. So global money is saying every little pullback, buy the market. Okay? And again, will this eventually peter out? Sure. I mean, eventually the money will be invested. And obviously, in my opinion, what's going on here, see how in the last, I mean, really, if you zoom out on this chart, I mean, you've gone up a little on the markets, but for the most part, it's just been a slow move up. I mean, from literally a week and a half ago, we were at 204, and we're only at 205 and a half, so it's not a big move. But this is distribution, so you get a lot of buy the dip money flowing in, but then institutions slowly unloading. So eventually that'll peter out, and you won't have the buy the dippers, at which point we'll have to look for that change in character. But in the short term, I wouldn't go out on a limb yet and say that it's there. We're not at that point. All right, I'm surprised by the extent of this move up, no doubt about it. I mean, if you go to the DIA or any of these other charts and you just look at the daily, I mean, these are just unbelievable charts. I mean, look at that move up. All right, probably the biggest move I've seen in years, if not multiple years, and plus we're at the highs of the market instead of when we were at the 2009 lows. You know, if you bounce like this off of 2009 lows, you're like, ah, well, we were oversold. In this case, not so much. So definitely amazing to watch, but again, doesn't mean it's a change in character. Now, one chart I do want us to watch is the dollar-yen chart. All right, the dollar-yen daily has a potential topping tail here. This could be significant for the markets. It's something that I'm not saying that it's a definitive thing I want you to watch and say that this is a big thing, but I do want us to pay attention here because if the topping tail holds into the end of the day and you get a top in the dollar-yen, markets actually could start to sell. Look at the move up and look at the move on the QQQ. All right, virtually identical. Look at it on the DIA, which is the Dow. Look at it on the SPY. SPY is a lot of lines, but virtually following the dollar yen up here. So again, if the dollar yen, USD, JPY is the symbol on my TradeStation platform, if this holds into the end of the day, you can see the dollar yen start to pull back, and that may, and I say may again, because if the volume stays light around a holiday, it may not have as much impact as we could think it would, but if it does hold steady, you might see a little bit of a minor pullback. But again, I'm still watching for a change in character before I go out on a limb and say, okay, markets will head down. You guys know basically every video for the last 2 weeks now, I've said, listen, until we see that change in character, markets could grind higher. I don't think there's a lot of upside, but they just keep on bringing the markets back off gap downs. If you open flat, you float neutral to higher for the day. You know, it's just like basically like 25-cent higher, 50-cent higher type days. And flattish type days for the most part. All right, and again, I'm kind of thinking that unless we see a change in character, that's what you're going to see. You're not going to see, another 10% short-term move up in the markets. You're going to see kind of a grind. A grind is probably a good term for that. All right, so watch the dollar yen, guys. Very important to watch the dollar yen. Oil today is up slightly, up 37 cents. It's actually up near yesterday's highs before the oil rolled over, so that's a decent move. I actually am still bullish on oil because it's held this pivot low, so that's a positive there. If we look at silver SLV right now, SLV basically flat. Had that big pop after the big drop yesterday and then kind of came in on the Fed minutes and is just consolidating here. So I'm still watching to see where the next move on that could take us. Freeport McMoran, Freeport FCX is having a decent little day here today. Not too shabby there. Yahoo's an interesting one because it was up sharply earlier in the day, up literally $1.50. Now it's come back in. If by chance this sells off and kind of closes, let's say below this area right here, let's say below 51.25, that actually would be bearish to me because it would mean that you had a lot of buyers here and they couldn't keep the price up. And if it closes down here, I think it continues to go down to about $45 per share. All right, obviously, if the market was selling, it would be a lot easier for that to come down, but it probably will coincide. Couple stocks out there that are showing strength or weakness that I'm paying attention to. IBM continues to be really just taken out to the woodshed. Look at this over the last couple days when the market's been neutral to positive. Very ugly chart all the way from 65 bucks to about 60 here. That's while the market again has moved up. And again, even look at today. I mean, today the market's rallied from the opening bell, and look at IBM. Kind of came straight down and is even at a pivot low point here. So a little bit of weakness there. One strong stock here. You had some potential good news on Intel being announced, and that stock has moved up beautifully. And again, look at that move up intraday. Very rare you see a stock the size of Intel make a move like that. But basically, they came out midday and projected more growth for 2015, and so the stock has moved up because of that. All right. Let me just see if there's anything else on the radar. IYT, I want you guys to pay attention to IYT. This is your trend line to watch on a closing basis. Notice how we were below it intraday yesterday and then rallied back above it. Today we opened into that same low, rallied back above. What you're looking for on the IYT is a close below this level, which is the 60, 161.65 level, we'll call it. A close below that means breakdown to me. As long as it stays above, just like the market, it can float above. It can float up. So watch that very, very closely. All right, let's just flip back to the spiders and summarize here. Again, markets no change in character right now, staying in the upper ranges, setting tables for a potential buy program into the end of the day. Markets again, no change in character is the biggest thing to remember. Therefore, markets could stay up. The one thing I want you paying attention to is the dollar yen. Watch for that topping tail on the dollar yen chart. Could see some pretty heavy selling because it's so overbought if you get the topping tail. Talk to you later, guys. Come join us here at InTheMoneyStocks.com.